What's happening, high tide traders and investors? It's Rod with Pow Group. Welcome back on the Pursuit of Wealth. It's Wednesday, April 13th. Hope you're well today. Going to dive into the high tide chart, going to do some technical analysis in this short video today. Going to go over the pattern to be watching, monthly inside bars at the moment as well, but we're looking at a weekly equilibrium. Before we get to it though, make sure to smash the like, subscribe to the channel, tick the bell, you'll be notified on any future updates. Diving into the first piece here. So I did do a video about 3 weeks ago on why I turned bullish on high tide, and I said is it time basically now to buy the stock. So you can check out that video. It's about 13 minutes long, but essentially we're starting to see a lot of competition in the value space. And like I said, just watch that video for some additional thoughts and insights as to why I'm bullish on the stock. Also, in terms of earnings, we don't have anything coming up until June, but tentative date is for June 22nd, and we'll want to see official confirmation from high tide on that date. But the EPS forecast is a negative 0.1, and revenue is forecasted at 82.08 million, which is a huge increase, about 12 million from the prior quarter. And we did beat on the last three earnings on the last three quarters. So if we can see that trend continue, that could put us somewhere around the 84 million. And it's going to be really interesting. We know that a lot of companies are seeing positive EPS, and we're going to be watching for a potential for, I think high tide could turn a profit and see positive EPS as well. And like I said, if that trend continues, I could see anywhere from 83 to 84 million coming up in the next quarter, and that'll be here before you know it. But in terms of the technicals, like I said, it's all about this weekly equilibrium. So we have the low here at 365. That's support number one. We have the high of the bounce, which is at 589. And of course, this is on the NASDAQ, so all prices are mentioned in US dollars. So we have the low, high of the bounce, higher low, lower high, scouting another higher low. So we're just caught in this equilibrium here, unable to change the weekly trend. We know that we need to change weekly trends to be confident in the bottom being set. And then we need to change monthly trends as well, right? We need to confirm weekly and then monthly uptrends to be absolutely positive that our 52-week lows are in and that we could potentially be heading up to a new bull cycle and 52-week highs. But like I said, support number one there at 365, support number two at 386, and trying to confirm support here, and another weekly higher low at 405. So we've got 365, 386 and 405 as supports, and resistances to be watching is 589, 510, and those are the key levels. So let's just say we break 510 from here. That's going to invalidate this equilibrium pattern, and we can likely expect a big move up to that 589. If we break 589 from here, that's going to confirm a weekly uptrend. And like I said, if we zoom out to the monthly time frame, you can see here that it's monthly inside bars. We did have a bear break. We lost support there, but ended up not seeing much follow through, and we're back within a monthly inside bar. One thing I want to highlight though is we could see an EMA 12 and 26, so exponential moving averages. We could see a bear cross of those two moving averages, which would be very bad. We're currently in a monthly downtrend on high tide, which is not a good look, right? If you're a bull, you want to be in monthly uptrends, and if you're in a monthly downtrend, that's very concerning, right? Because it's a macro level time frame. So if we do see EMA 12 and 26 cross and have that bear cross follow through, we are going to be looking at that 365. That would likely put us below 365 and mean that we break that equilibrium bearish. And after that, we really don't have any support until about $3. We can likely zoom into the weekly time frame here and get a level, but even on the weekly time frame, there's not much there in terms of the weekly either. You'd be looking at these previous tops here. So 250. So 250 was previous resistance. So I could see that act as new support. We'll just bring that up here. So this blue line, 250 psychological. But if we zoom into the daily time frame, we may be able to get a level from the daily time frame as well. So we do have a higher low here at 278 and $3. So like I said, after 365, you're going to be looking at $3 psychological, and then really nothing until about 250. So again, if you're looking at this stock and you're wondering whether or not you should take an entry, well, you could start to enter now with a stop below. If you're conservative, you could set your stop below this low here at 386, as if we lose that, we'll lose this equilibrium pattern. and likely can expect more downside. You could allow for a little bit more wiggle room and more risk. You could put your stop under 365. So there's multiple ways to play it. You could scale in multiple orders. You could enter a bit now. You could enter a bit at 386 support number 2. You could enter again around that 365 area in 3 separate orders, and then set your stop below. There's multiple different ways you can play it, right? And maybe you're wondering if we're going to see more downside, if you should sell and reload cheaper. Again, this isn't financial advice. This is for entertainment purposes only. But like I said, if I was a long-term bull, and if I just entered, I'd more than likely set a stop loss under 365 if I was a little bit more conservative. If I'm an aggressive bull, I'm likely just going to dollar cost average, being this close to the bottom in the MJ sector, in my opinion, with the Schumer bill potentially coming this month. We need to see weekly uptrends across the whole sector as well. It'd be great from here if we confirmed a weekly uptrend. So if we broke above that resistance at 589, that would confirm a weekly uptrend. But we know that it means nothing if 1 or 2 names in the sector are confirming weekly uptrends. We saw that with Sundial. We saw that with Hexo. They confirmed weekly uptrends, but they ended up giving the move all back because we still didn't have weekly uptrends across the sector. So I'm watching the ETFs like HMMJ, ETF like MSOS, watching for when then they still have a ton of work to go before they confirm weekly uptrends, right? So I could see at some point over the next few weeks, perhaps we start to see some momentum into the end of April. And like I said, we have the MORE Act passing through Congress at the moment. There's even talks of potential for safe banking to be thrown into the manufacturing bill. So we'll keep a close eye on that, and I'll be sure to update everybody if I do come across any further updates. But you can see here as well, EMA 26 has been a brick wall as a resistance, and EMA 26 is sitting at $5 at the moment. So if we do start to hold this level, watch for a move back up to around that $5 area. But like I said, that 510 is going to be resistance number 1, and then 589 is the key resistance, as if we break that, that's going to confirm a weekly uptrend. But from here, what we can likely anticipate happening is just a tightening range. Maybe we bounce, we form another lower high, higher low, and then eventually a break is going to be imminent, and just an inevitability. So we're going to be just watching this very simple pattern, right? Just keep it simple. If we break that resistance here at 510, then we're likely heading back up to that 589. And if we break 589 and we see that weekly uptrend confirm, then we don't have anything up until about $8. So like I said, very low risk opportunity if you're looking for some entries with a stop below the low there at 365. In terms of the weekly moving averages, a 10-week moving average there at 459. We are below it, so we're showing some signs for concern at the moment. We had a bear cross of the stochastic and the MACD, still bullish, but starting to curl a little bit. So we'll want to see a close back above that 459 area ASAP on the weekly time frame. But starting to see some warning signs there in terms of the stochastic. And like I said, we still have that monthly EMA 12 and 26 bear cross that could occur. In terms of the daily time frame, we're starting to see the 100 curl back down towards the 50. That's generally a bearish indication, and now we're below the 50-day moving average as well. But that is sitting at $4.52. So going to be watching that level, and we need to get back over it, a daily candle close ASAP. After that, we got the 100-day there at 473, and then the 200 there at 566. So it's going to be very hard for the bulls in order to confirm weekly uptrends. It's going to be very hard for them to do unless we see the whole sector reverse. Let me know in the comments below what your thoughts and opinions are. If you agree with me, disagree with me, we'll continue the conversation in the chat below. Make sure to smash the like, subscribe to the channel on your way out. I would appreciate it. And we shall see you again in the next video. Take care, everybody.